I mean, I think having spent time in financing, right, you have, in terms of just like thinking about the all the different pods, right? You have equity capital markets, you have debt capital markets, you have structured finance, you have derivatives, right? I mean, I was in structured finance, so mainly there I was tasked with underwriting debt deals, advancing or lending, providing warehouse leverage to some of these originators, and then on the classic, look, I mean, I think on the classic side, you're focusing more on M&A activity, divestiture, sales. If you want to buy a business, you're advising clients on a whole host of different, alternatives. I'd say, clearly one of the key differentiators or the differences is in financing, you're in a product group, right? So you are supposed to be the master of the product, right? So in structured finance, you work on a whole host of different things, but you focus within a particular, that particular product. In classic, I mean, or on the M&A side, you have the opportunity to work across a broad swath of different things. I mean, both are super important, right? And look, I mean, when I kind of look at having worked at structured finance complements what I currently do on the FIG side very much. So that's another piece, right? Is make sure, try to get as much exposure to varying folks, opportunities as possible. So then to answer your second question in terms of how do you ensure you're on the right deal, et cetera. Look, I mean, part of this goes back to the original point, which is you got to show and prove yourself that you have the ability, that you have you are a reliable resource to then go and to put on deals. And over time, as you build those deal reps, I mean, you can go and you have communication, you speak to your colleagues and bosses like, hey, I want to go and I would like to work on X, or I would like to work on Y, or industry specific. So it's important to be proactive about that as well.